Counting double-digit thousands.
Hello guys, my name is Luca and today I will present you another weekly outline analysis on crude oil WTI future markets starting from 28th of August until the 1st of September 2017. So guys, to get a better fundamentally painted picture for this week, we need to get a step back to take in the wider picture, to take in the wider screen, and talk about what happened into last week. Well, last week over on Monday, the price went down at its most 2.5%, and it was nothing major happening right there because actually it was a technical answer to this price boom on the Friday of 18th 2017, Friday the 18th of August 2017. So really I spoke about this huge technical pullback in my last week's analysis, and I actually called it out before it happened, so you can check it up. Its link is in upper right corners, so feel free to check it out and tell me what you think. And that video is also have some great tips on how to trade crude oil, so yeah, check it up if you want. Now starting from roughly from here, ending here, is a period of 36 hours, and in these 36 hours personally I did not find any good entry point because the trading range is just ultimately low, which just underpins my next clue. And we are now looking at Wednesday's the EEA news report release, and you can see, oh, it looks kind of good. The inventories showed nice draw. It's nothing special, and you can see that it was a good time to trade. And I will say no to that. I will say no because I never encourage my personal traders and the guys that are in my group to trade the EEA news release. I always said wait 45 minutes to 1 hour until the trend establishes. After the trend establishes, and if it establishes, then you can go in and place your trade. We do not bet, and I personally do not like gambling, at least when I'm trading for real money on the markets. So yeah, to get back on my point, the trading range was, for example, this is 47.72 and the highest was 48.50, let's say, for example, 50, which is not even 100 pips of range. And if you guys just take in what I was talking about, I mean, it's really a shame. It's really a shame because the market currently vapes for direction. It screams, and really it is a hard connection and relationship to understand, but I think that I have got it. Now again, ultimately low trading channel, and over on Thursday, when the Hurricane Harvey got closer to the US coast, the investors' fears were dominant, and the market again crashed almost to above 2%. And why is that? Well, it's pretty simple. The US, the investors are actually scared of refineries closing because they think that will cause another crude oil glut situation. And yeah, I believe that it is kind of a nonsense because the US refineries and the US refineries aren't the single ones in the world, and and they will only be closed for a few days. So yeah, I don't see 2.5 something percent decrease in oil prices just because of that. But you can also need to be aware of the situation that the market is full of full of speculators that are willing to make some serious money quickly. And as you can see, the pullback was obvious and just around the half of this 2.5% drop. So actually the real fear is about 1.2 to 1.5 negative percent on that hurricane story. Now to go again, look at this area of tension. Look at this area of tension, guys, please. Friday was my favorite last week. If you just, I believe that there isn't any single one of these candles that is actually hasn't got a stick on it. Look at those sticks. Look at those sticks. It's just saying how much stressed the current oil market is in. It's a huge stress. It's a huge stress, and it's a huge stress, and it is a huge area that just amplifies how important the direction the market needs. And sometimes the market just needs to be alone and to digest all the data and all the inputs everyone have faced in it. Now, regarding the following week self-analysis, I'm expecting Monday to be colored in red, so we can call it a bear Monday, because of potential the Hurricane Harvey has on the market, and because the fact that the refineries I was talking about a few minutes ago are closed. The second thing I would like to talk about is the American Petroleum Institute numbers that are again supposed to show some nice inventory draws, and these numbers doesn't really mean anything, but I'm using it as a pace setter for trading sessions that will take place on Wednesday. Why is that? I will make additional video on why is that and what the American Petroleum Institute numbers actually are. So stay tuned for that. And yeah, over on Wednesday we are expecting to see another EA bullish drawdown, and the only thing that is left is US Baker oil rig count, which will take place over Friday, which is another expected bullish results from it. So yeah, as Justin from my words, you guys can expect, you can see the bullish fundament getting stronger and evolving. So yeah, this will be it for the current commentary on crude oil news, and I will now like to present the free gift for anyone who stayed for so long in this. And this is my crude oil analysis in my trading group for 28th of August 2017 Monday daily analysis. As you can see, guys, it is posted 11 hours ago, and afterwards it was not edited. So now you can pause the video and read the analysis for yourself, and also pay close attention to the technical analysis, as we already have managed to hit all 4 targets for today, and it's relatively early in the day with a lot of trading action hopefully awaiting on the market. And also, guys, thank you all for tuning in. Thank you all for taking time for listening to me. If you have any other questions, please feel free to write in the comments, to contact me on Instagram via direct messages, to contact me via email, to contact me via Facebook, all around. Or if you want to join my team, if you want to join my group, pretty much everything you want to know about crude oil. I have been in this industry for 8 years, and I believe that I have the right answer for you. So thank you for tuning in, and goodbye.